Hey there, hope all is well. Back at today with some more RTD news updates. Before I dive into today's articles, I want to give you a heads up that tomorrow night at 9 p.m. Eastern Standard Time, me and Gregory Manarino from TradersToys.net will be sitting down for an RTD live talk. So hopefully you guys can tune in as well as call in via Skype to join the conversation. We're going to be covering a lot of subjects dealing with our monetary system, especially on the subject of banks. And so just to give you a little bit more idea of what's going on today, as you can tell from today's news title, Fed closes Guaranty Bank and JP Morgan gives a warning. We're going to be talking about the banking sector and what's happening currently that's not really making mainstream news, being that it was this past Friday that a bank had some problems and was, for the most part, taken out of operation and turned over to a new bank. So I have about 5 articles here that we're going to dive into. And as always, I'm going to be short and brief, but yet leave the articles down low for you to check out if you're interested. So let's dive into today's articles. So first article here is Fed closes Guaranty Bank to reopen its first citizens, out of the Milwaukee, Wisconsin Journal Sentinel. The next article here is from Fox 6 News, and it says long lines as many look to close accounts at Guaranty Bank now, First Citizens Bank. And then the next article here is also from Milwaukee Sentinel, and it's investment expert questions shutdown of Guaranty Bank. And the next one here is from Fortney News, and it says Best Bank in Bethel-View, Kroger's closes without warning customers. And then the last article here I think is the most alarming one, and it's from Bloomberg, and it says JP Morgan tells banks to partner up as U.S. deposit drains looms. So let's dive into the very first article here from the Journal Sentinel. It said Fed closes Guaranty Bank to reopen its first citizens. So we'll scroll through it briefly, and then I'll leave it below for you to dive in further if you're interested. And it says Guaranty Bank unable to recover from the devastating loan losses stemming from the housing and forfeiture crisis, failed and was shut down by regulators on Friday. So it was a typical experiment of a bank holiday where it closes on Friday and doesn't open up under the same name this past Monday. And it says the 94-year-old Glendale-based bank was closed by the U.S. Office of Comptroller of Currency, with First Citizens Bank and Trust of Raleigh, North Carolina, assuming all of its deposits. It says only the 12 standalone branches in Wisconsin, Illinois, and Minnesota will reopen as branches of First Citizens Bank. It says Guaranty operated mostly from grocery store branches in those states plus Michigan and Georgia, and the company's 107 in-store branches won't be reopening, according to the Federal Deposit Insurance Corporation, which was a receiver for the guarantee when it failed. It says all depositors of Guaranty Bank, regardless of where they are conducted business, will automatically become depositors of First Citizens, the FDIC said. So, imagine going to your bank or wanting to go to your bank on Monday, and you're going and it's either closed or it's a sign saying we'll reopen in a couple days under First Citizens and not receiving any type of warning. I can imagine the shock that would definitely have on someone going to transact some business there. So it give you a little bit more what's going on. It says, in addition to assuming all of the deposits of the failed bank, First Citizens agreed to purchase $892.6 million of the failed bank assets. The FDIC will retain the remaining assets for later disposition. So Guaranty had been under orders by federal regulators since 2009 to improve its financial condition, but the bank struggled to return to its profitability and boost its capital to required levels. So once again, it was a bank, a smaller bank that was having problems since the Great Recession. It was never able to recover. And what kind of alarming is the fact that the FDIC gave them some warnings saying that boost up your capital, boost up your savings, your reserves, just in case there's a hiccup down the line, and they were not able to do so. And so that's quite telling. I wonder how many other banks are in similar positions where we're not really hearing about that on mainstream news. So more news if you're interested for this one, scroll below. The next one here says long lines as many look to close accounts at Guaranty Bank now, First Citizens Bank. And I thought this is quite interesting, being that this is a little kiosk bank, which is, they say is in a lot of Kroger stores, which is I believe a Midwest super chain type of a grocery market. And it says here, it was business as usual on Monday, May 8th, for a number of Guaranty Bank customers. They have a new bank after the Fed shut down the Guaranty Bank on Friday, May 5th. While First Citizens Bank has taken over, some customers said they new setup itself isn't convenient, rather. Sorry. It says federal officials say all Guaranty customers can still use their debit card and write checks. Nothing has changed there. It says First Citizens Bank has taken over Guaranty's former standalone branches. the retail-based locations, which are the majority of Guaranty Wisconsin presence, will remain closed. So every Guaranty's Wisconsin will remain closed. It says a number of customers interviewed Monday said that their retail branches located inside stores like Pick and Save and Walmart were their most common ways to bank. It says Pick and Saves for sure, 100%. That's it, just Pick and Save. It does Brookfield ones, Wisconsin ones. Not sure what that means. Quoting someone, it says there were 38 such retail locations in Wisconsin. Those are now closed. The standalone Guaranty Bank locations will remain open, operated by First Citizens Bank. Every Guaranty customer's money has been transferred to the new bank. Still, Herman came to the Brookfield location at 112th and Capital Money to close her account. So apparently, just because of the shock and surprise, a lot of people are saying, "Hey, if the bank can close out of nowhere without giving us a heads up, I'd rather not have my money in the bank." So just a small sign of, I believe, of things to come down the line when this type of trend catches on, and it happens to more and more these small banks that do business locally for the most part. So there's not too much money to be made when people aren't really borrowing as much and are not really able to deposit as much because people are deciding to either use their credit cards or just hold them to their cash directly. So more information is below if you're interested. Quite lengthy here. Next article here is from the Journal of Wisconsin as well. It says investment expert questions shutdown of Guaranty Bank. It says new investors were on the verge of pumping $100 million into Guaranty Bank, a prospect that should have stopped federal regulators from shutting the Glendale-based institution last week. An investment banker who was working with the investor said on Monday. Says Stephen Hove, executive of Chicago-based Hove Group, said the U.S. Office of Comptroller of Currency pulled the rug out from the Guaranty Bank when it suddenly closed it down on Friday night. Says Hove, who is widely known in Wisconsin and everywhere else for helping banks raise capital, said the Feds knew that a recapitalization of about $100 million was in the works and might have been completed by the end of June. Says the money could have restored the bank's capital to levels acceptable to regulators. Scroll down a little bit more. It says William Grassano, spokesman for the Office of Comptroller of Currency, said Monday that the agency had no further comment beyond the statement it released Friday night explaining the closure. The statement read in part, the OCC acted after finding that the bank had experienced substantial dispensation of assets of earnings due to unsafe or unsound practices. Unsafe or unsound practices. I wonder how many other financial institutions fall into those same categories. It says the OCC also found that the bank was significantly undercapitalized and failed to submit a capital restoration plan acceptable to the OCC. So it was unsafe and practicing unsound practices. Interesting. More for this article if you're interested below. Next one here is Best Bank in Bethel Kroger closes without warning customers. So Best Bank, as you can see from the sign above my shoulder, is a spinoff / another name for Guaranty Bank. And that's in my area here in Michigan. And here's the ATM machine here from Best Bank ATM. It says, according to Best Bank website, the bank, which operated as Best Bank in Georgia and Michigan, though it was officially Guaranty Bank, was closed Friday, made by the Office of Comptroller of Currency, which named the FDIC insurance company, or FDIC, the receiver. Give you an idea what's going on here. It says residents who bank with Best Bank, a financial institution most known for its Kroger grocery store locations, were surprised to discover Monday morning that the only branch in Forest County has shut down and been taken over without warning. According to Best Bank website, the bank which operated as Best Bank in Georgia and Michigan, though was officially called Guaranty Bank, was closed Friday by the Office of Comptroller. I already mentioned that part. It says, to protect the depositors, the FDIC entered into a purchase and assumption agreement with First Citizens Bank and Trust of Raleigh, North Carolina, to assume all of the deposits of the Guaranty Bank, the FDIC website said. All depositors of Guaranty Bank, regardless of where they are conducting business, will automatically become depositors of First Citizens Bank and Trust Company. So just the idea that, the FDIC, gives warnings saying that, you don't have enough money, just in case you're not liquid enough for us, so we're going to shut you down. And so we have another bank, First Citizens Bank and Trust Company. They're going to step in and kind of take over your depositors' accounts and things like that. In the meantime, the people who actually have the money in the banks knew nothing about it. it's quite alarming. But yet, just signs of how the whole banking system and how the monetary system has people spun in a loop where most people don't even know what's going on their behalf. Nevertheless, realizing the importance of really becoming more aware of these things and kind of beginning to rethink or get away from conventional practices, being that we're living in a monetary world that's kind of upside down right now. So just my 2 cents right there. Scroll down for more if you're interested. And then what's more shocking than anything else is this article from Bloomberg from JP Morgan tells banks to partner up as U.S. Department deposit drain looms. And so just for the title alone, JP Morgan is one of the too big to fail banks that's for the most part one of the ringleaders in this whole bailout, scheme that's going on in preparation for what may be coming next in the form of bail-ins when, JP Morgan itself can't be recapitalized from, the Fed or from our government. And so just the fact that they're coming out and saying, hey, there are some things going on where the next couple of years or so, you may have problems if you're not joined to us or a part of us, period. So you might want to take warning, take heed right now. So I'll read through this shortly and then share my thoughts at the very end. It says JP Morgan Chase and Company has some advice for regional banks. A deposit drain is coming, so merge while you can. So they're kind of telling you what is coming. So this kind of like, I'm not sure if it's a warning or a heads up to those that are, smaller banks that are being forced to merge. It's not like they have a choice. They have to join sides with these too big to fail banks, because the little dog always, for the most part, always pushed aside and trampled upon when you're competing against such banks that have been proven to have the monetary powers that be on their side. So give a little bit more of what's going on here. It says the company's investment bankers are warning depository clients that they may begin feeling the crunch in December, thanks to a byproduct of how the U.S. Federal Reserve propped up the economy after the financial crisis, according to a copy of a confidential presentation obtained by Bloomberg News and confirmed by a JP Morgan spokesman. So it says a confidential presentation that was obtained by Bloomberg, but yet they were given permission to print this article. And so clearly a sign that this is not like, a warning. It's more so like you better do it now or you're going to go under come December / come sometime in 2018 or sooner. And so more so I look at this as a threat by JP Morgan, a too big to fail bank, telling the little guys, you better, join us now, or, get into the loop with us, because we are going to take you out. So it said JP Morgan argues that some mid-sized U.S. banks, those with 50 billion in assets or less, could face, better like saying will face, a funding problem in coming years as the Fed goes about shrinking its massive balance sheet, according to a 19-page report the New York-based bank has begun sharing with clients. So at first it says Bloomberg obtained it and JP Morgan confirmed it. Now it's saying here that according to a 19-page report, the U.S. bank has begun sharing with clients. The Fed's bond buying spree from 2009 to 2014 doubled. Quantitative easing inadvertently left the industry flush with deposits. Investors took money they got selling mortgage-backed funds, bonds, and treasury securities to the Fed and parked it in the U.S. retail and commercial bank accounts. It says this created some 2.5 trillion in excess bank deposits, according to the JP Morgan. It estimates that 60% or 1.5 trillion of that money will trickle out of banks in the next 4 to 5 years if the Fed follows through with recent guidance and begins reversing quantitative easing in December. So this is a byproduct of the Federal Reserve, who has 4.2, as I mentioned, of bonds and treasuries on its balance sheet. As they begin to so-called sell and unwind these things, is going to cause a liquidity crisis where there won't be enough money going around, being that they're going to call in all that is out there now. And that's going to be a problem for everybody, especially the regional banks, as JP Morgan is giving everybody a heads up. So just wanted to basically just inform you of what's going on out here in the news dealing with the banking sector. And if I was a bank, if I banked at Guaranty Bank and I was one of the people who went in on Friday or this past Monday and was caught off guard by the fact that my bank was closed and I wasn't able to do a transaction, and especially if it was something of importance, I would have been, very upset, if not borderline irate, at the fact that no one informed me or told me that my bank was in trouble and also my deposits was in trouble. But then on a much bigger note, for those that are not really monetary savvy and not financially aware of what's going on, to not really know that when you give your money to the bank, you are now an unsecured creditor, which means you are, one of the small fries in an institution of which, if something goes wrong, you're going to be the last one to ever get your money back if you get it in a total that you deposited in there. So just more of a little bit of awareness what's going on out here with the banking sector. We're entering times where now there's so much stuff going on monetarily with the subprime situation is increasing. We have student loans is out of control. We have all the monetary things going on in other countries that's going to eventually affect us. We got the whole idea that the dollar is too strong according to this administration. And so all these things going on, it all impacts you directly in your pocket, in your savings. And so definitely things you should become more aware of. So hope you found this to be informative. If you did, please share this with other people so they can become aware of what's going on. And also take the time to read through some of those links. As I mentioned, I just covered through the top of them. And so it doesn't really give you a good in-depth view of what's going on. But if you're a banker at Guaranty Bank or a regional bank that could be one of the banks that was warned by JP Morgan, perhaps you might want to inquire into your current bank status to make sure they are able to withstand what is inevitably coming. And so other than that, to hope all is well. And also, if you haven't, have a chance to check out the Dollarcation infographic that gives some information on a monetary history, which can really encourage you to think beyond the Federal Reserve note and things like that, and just the traditional banking models, and get into something a little bit more sound and steady, such as precious metals. So that's it for today. Talk to you later.